Have you ever stopped to think about how you search for a home? Or, how huge commercial buildings get bought and sold? It's all changing fast, thanks to technology.
Absolutely. The whole real estate landscape, whether it's renting an apartment or trading skyscrapers, it's really being transformed.
And one company, CoStar Group, seems to be right in the thick of it all.
Definitely a major player.
So today, we're doing a deep dive into CoStar, looking at their second quarter performance for 2025 and what they're planning strategically.
Right. What's the big picture look like for them right now?
Well, our mission here is basically to unpack their latest earnings call, look at the financial filings, and pull out the key insights for you.
Things that maybe surprised us or, things that signal bigger shifts.
Exactly. We want you to understand not just what CoStar is doing, but maybe why it could actually matter to you, whether you're renting, buying, or just watching the market.
Okay, let's get into it. Where do we start? The numbers.
Start right there. Okay, unpacking CoStar's Q2 2025 results. The first thing that really jumps out is the sheer scale, the revenue number.
What are we talking about?
$781 million. That's a solid 15% increase from last year.
15% is strong growth in any market, but especially real estate lately.
Right. But here's the really wild part. This marks their 57th consecutive quarter of double-digit revenue growth.
57. Wow.
Yeah. Think about that. It's almost 15 years. Just consistent, accelerating growth.
That kind of streak, it really suggests something fundamental about their business model, doesn't it?
It does. It points to a certain stability, maybe, in a market that's usually pretty cyclical.
Yeah, and it's fascinating because, well, what does that stability come from? Their filings mention that about 95% of their revenue is subscription-based.
Okay, so it's predictable. Sticky.
Very sticky, it seems.
Well.
Now, they did mention their overall contract renewal rate dipped just a tiny bit, 89% from 90% over the last year.
Any reason given?
They attributed that to bringing Matterport into the fold, which is newer. But still, 89% retention is incredibly strong.
Definitely. So it raises that big question, right? How are they pulling off this kind of growth when, the broader market, especially offices, has had such a rough time?
That's the million-dollar question, or maybe the $781 million question in this case. How are they doing it?
Okay, so with those big financial numbers as the backdrop, let's dig into how. A big part seems to be their moves in residential real estate, apartments.com and homes.com.
Right, taking on some big established names there. How's apartments.com doing?
Still showing real strength.
Yeah.
Their multifamily segment revenue, $292.3 million. That's up 11% year over year.
Still growing nicely then?
And they are spending big on marketing, like really big. Over 4.8 billion media impressions generated.
4.8 billion. Where are they putting that money?
All over. Streaming video investment up 25%, paid social up 13%, and digital up a whopping 130%.
Okay, so they're blanketing everything.
Pretty much. If you watch live sports, NFL Draft, College World Series, NBA, MLB, or popular shows, you've probably seen their ads.
Makes sense. And how's that translating into market share or traffic?
Well, here's something interesting. Overall traffic to rental portals actually went down, but the apartments.com network weathered it best, only down 11%.
Only 11%. How did competitors fare?
Zillow's rental network was down 13%, Apartment Guide down 21%, and Rent.com took a big hit, down 39%.
Wow. So relatively speaking, apartments.com really held its ground, even gained share, perhaps.
Seems like it. And their brand recognition, what they call unaided awareness, best in class at 68%. That's way higher than all their main competitors combined.
68% is huge. So people just think apartments.com when they think rentals.
Apparently so. And their value proposition, what they tell property managers, is pretty compelling.
What's the pitch?
They claim they deliver more leads and almost twice as many actual leases as their two closest competitors put together.
Twice as many leases. That's a powerful metric if it holds up.
Definitely. And they're leaning into tech too, right? Like those Matterport 3D tours.
Ah, yes,
Yeah.
the virtual tours. Are those actually moving the needle?
Seems so. They reported 67 million views on those tours, which is up 193% year over year.
Huge jump. And does it lead to anything? More engagement?
Yeah, they say people spend 71% more time on listings with those tours, and they generate 23 times more leads.
23 times. Okay, that's significant. It feeds into that whole idea of renting without even visiting, right?
Exactly. That rent sight unseen trend. Their data says 41% of renters are willing to do it if the imagery is good enough.
Makes you wonder about the future of the traditional apartment showing.
It does. Oh, and they also launched some kind of fee transparency thing with a big property manager, trying to build trust, I suppose.
Interesting angle. Okay, so that's apartments. What about the single-family home side with Homes.com? How's that battle shaping up?
Also looking pretty strong, actually. Residential revenue was $28.4 million in Q2, up 8% year over year.
Okay, solid growth there too. Any specific products driving that?
Yeah, they highlighted their Boost product. Seems quite successful. Sold over 1,200 of them, reached something like 14,000 home buyer.
And does Boost work? What does it do?
Apparently, listings with Boost are 25% more likely to go under contract within 10 days.
That's a tangible result for an agent.
For sure. And it's acting as a funnel, too. Nearly a quarter of the agents using Boost have already converted to full memberships.
Smart. Building the pipeline. Are they marketing Homes.com heavily too?
Oh, yeah. New campaign with Dan Levy and Heidi Gartner. They're touting over 100 million monthly unique visitors now and generated over 4 billion paid media impressions just for Homes.com.
So serious investment there as well. Now, you hear Homes.com positioned as the agent-friendly platform.
Yeah.
What does that actually mean in practice compared to, say, Zillow?
That's a really good question, and CoStar is pretty vocal about the distinction they're trying to draw.
How so?
Well, they point to things they call Zillow's tactics. Like, apparently, Zillow forces agents to get listings up within 24 hours, or they might get banned.
Okay. Pressure tactics.
And also that Zillow seeks direct data feeds, kind of bypassing the MLS systems that agents rely on.
Right. The multiple listing services, the agent's database, essentially.
Exactly. CoStar positions Homes.com as the opposite, a platform that works with the agent, helps market the property, and crucially, doesn't divert leads away from that listing agent.
Okay, that's the pitch. Do they have examples?
They shared one specific story, a home in Montgomery County, Maryland. Apparently, it got banned by Zillow for some reason.
Okay.
Homes.com stepped in, gave the listing agent a free boost for that property.
And what happened?
It got 155,000 views in 12 days.
Wow. That's a pretty direct way to demonstrate value to an agent who felt burned elsewhere.
You'd think so. And they say agent sentiment on social media is way up to like 58% higher than last quarter, with positive comments increasing 30%.
So the narrative seems to be resonating with some agents at least. What about their pricing on Homes.com? Are they trying to make money fast or play a longer game?
Seems like the long game. They mentioned prioritizing market penetration, getting agents onto the platform rather than maximizing the ASP, the average selling price right now.
Okay, land grab strategy.
Yeah, and they're building out the sales team to support that.
Mm-hmm.
Aiming for 750 reps to cover what they estimate is 500,000 to 750,000 viable agents in the U.S.
That's a big sales force build out. Suggests serious commitment, but also, significant upfront cost before the big profits roll in. Could be risky.
Sure. It's definitely a major investment.
Okay.
Shifting gears a bit, what about the commercial side? The core CoStar business and LoopNet. How are they holding up?
Given the talk about office market struggles, that's key.
Well, the core CoStar product seems resilient. Q2 revenue hit $270.9 million, up 7% year over year.
7%. Okay, still growing. Anything else stand out there?
Yeah, something pretty impressive, actually.
Yeah.
Their net promoter score, the customer satisfaction metric.
Sure has. Right.
Their U.S. sales team hit an NPS of 70, which is considered outstanding. And the Canadian team hit 63%. Both are all-time highs for them.
70. That's remarkably high for any sales organization, let alone B2B. Suggests clients are generally very happy.
Seems that way. And their subscriber count is up too, hit 275,000. That's up 19% year over year, though they said a lot of that was migrating users over from STR, the hotel data company they bought.
Ah, okay. STR integration helping boost numbers. Now, about that market context. We know commercial real estate, especially office, has been tough. High vacancy, negative absorption.
Right, that's been the narrative. But CoStar's data showed something maybe counterintuitive. Transaction volumes in Q2 were actually up 43% year over year across the main property types.
43%. That's a significant jump. What about office specifically?
Office transactions apparently spiked 71%.
71%. Wow. Okay, so maybe some signs of life or at least activity returning even to the challenge sectors. Interesting.
Yeah, definitely adds some nuance to the doom and gloom headlines. And it wasn't just domestic strength. Their international business is booming.
Oh, really? How's that looking?
4 straight quarters of record net new bookings internationally. And in Q2, those bookings were up 90% year over year.
90% growth. That's huge. Which markets are driving that?
The UK was a standout. Year-to-date bookings up 257%. And Q2 revenue growth there accelerated to 14% year over year.
Strong UK performance.
Yeah, and they mentioned the streamlining costs over there too, found $40 million in savings. Plus, they just promoted Alexa Maria Rathborn-Barker to lead their whole European operation. Signals a bigger push.
That makes sense. Europe's a fascinating market for them, isn't it? I recall reading something about the cross-border nature of deals there.
Exactly. Over half of commercial property deals in Europe involve buyers or sellers from different countries.
But there isn't a single dominant platform that covers all of Europe for that, right?
Precisely. CoStar sees a huge gap. No comprehensive pan-European CRE solution exists, so they're building out research, building out marketplace capabilities. They expect to launch in France by the end of this year.
So a major strategic priority, filling that void, that could be a massive growth engine if they execute well.
You'd think so. And LoopNet, their commercial property marketplace, is also doing really well globally.
How are some numbers?
Q2 revenue was $75.7 million, up 8% year over year. And they have data showing listings on LoopNet are 60% more likely to actually close.
60% more likely. That's a compelling stat for brokers and owners.
Absolutely. And the scale is enormous. They estimate $120 billion worth of transactions in 2024 were influenced somehow by LoopNet listings.
$120 billion. Wow. It's become a really central platform. Are they expanding LoopNet internationally too?
Yep. Launched in Spain already. France is expected in Q4. They think they'll have over 100,000 European listings soon.
Global reach expanding.
And just quickly, BizBeSell, their platform for selling small businesses, also chipped in. Reported 2,342 deals closed, worth almost $2 billion in total value, helped by some new deal accelerator feature they have.
Okay, so strength across the board, really. Commercial, international, even business brokerage.
Pretty much. Now let's pivot to something maybe a bit more futuristic. Matterport.
Ah, the digital twin company. That acquisition felt like a different kind of bet for CoStar.
It did. It's not just about listings. It's about, like I say, digitizing the entire built world.
So explain Matterport's core idea again.
Basically, they create these super detailed, immersive 3D models of physical spaces. Think way beyond just flat photos or even basic video walkthroughs. It's like you're in the space digitally.
The digital twin.
Right.
But how's it doing financially? I heard it wasn't profitable yet.
That's right. It's not profitable, and its growth rate had slowed down before CoStar bought them. But CoStar clearly has a big vision for it.
What's the plan then? How do they turn it around?
They believe integrating it across all their platforms, CoStar, LoopNet, Apartments.com, Homes.com, will accelerate its growth and eventually lead to strong profit margins.
Okay, leverage their existing reach. Makes sense. What else?
A huge thing is the sales force. Matterport had like fewer than 30 salespeople globally. Tiny.
Less than 30. For a global tech product.
Wow. Yeah. CoStar plans to use their thousands of existing sales reps to sell Matterport solutions. A massive expansion of its reach overnight, basically.
That could be a game changer for Matterport's commercial side.
Exactly. And that's another shift. Matterport historically had this sort of product-led, almost B2C feel sometimes. CoStar is pushing it hard towards B2B.
Focusing on the professional application.
Right, and emphasizing their high-end camera, the Pro 3. Apparently, customers using that camera have an 85% renewal rate on the software subscription.
85%. Compared to what for other methods?
Compared to only 40% for people just using the mobile app capture. So the quality really matters for retention.
Interesting. So they want more pros using the Pro 3. Any plans to make that easier? I heard those cameras were pricey.
They are. CoStar acknowledged that the effective first tour cost for a photographer, including the camera, is like $6,500. But the next tour only costs $3 in software fees.
That's a huge barrier to entry.
Totally. So CoStar says they plan to fix that, make the high-end capture more accessible price-wise, get more cameras out there.
That seems crucial for adoption.
Yeah. And they're rebranding it too, putting the CoStar Group Star Wheel logo on Matterport, fully integrating it visually.
Makes sense. Any other strategic moves with Matterport?
One other thing, they decided to wind down VHT. That was Matterport's own photography service business, which was apparently losing money.
Ah, shedding the unprofitable parts.
Right. Reallocating those resources, they said, to more productive areas, focusing on the core tech and platform.
So when you step back and look at this whole Matterport play, it really underlines a deep belief, doesn't it? That the future of interacting with property is fundamentally digital, immersive.
It really does, these digital twins.
Yeah.
It's a long-term vision to potentially dominate how every property is visualized and understood through data.
But it's still a bet, right? Given it's not profitable yet. What do you think are the biggest hurdles for them to actually make money from this digital twin future at scale?
That's the key question. Scaling it globally, making the capture easy and affordable, integrating it seamlessly, and proving the ROI to clients across all property types. It's a massive undertaking. It's not just cool tech. It needs to be a profitable business line.
Definitely one to watch closely. How does it actually drive revenue and profit over time?
Exactly. Now, just before we wrap up, there's one other big piece moving in the background, that domain acquisition in Australia.
Right, the big real estate portal down under. Where does that stand?
They're buying the remaining 83% they don't own. It's about $82.4 billion. Expected to close pretty soon, maybe Q3 2025.
A major international expansion into a mature market.
And there's an interesting twist. Australia's Competition Authority, the ACCC, just announced they're investigating REA Group.
REA. That's Domain's main competitor, right? Owned by News Corp.
Yeah. Apparently, REA implemented a huge fee increase, like 78%,
Yeah.
and the ACCC is looking into it.
So potential antitrust scrutiny for their main rival, just as CoStar is taking full ownership of Domain.
Interesting timing. Could be. And remember, News Corp also owns a big stake in Realtor.com in the U.S. So you have these interconnected ownership structures and competitive dynamics playing out globally. Might create some strategic openings for CoStar down the line.
Definitely adds another layer to their global strategy.
Wow, okay. That was quite the journey through CoStar's world.
A lot going on there.
Absolutely. From that really impressive financial growth, that 57-quarter streak,
Yeah, the consistency is remarkable.
to how they're really fighting it out in the residential space with Apartments.com and especially Homes.com challenging the incumbents.
Taking on Zillow head on with that agent-friendly angle.
And then this massive long-term bet on Matterport and digitizing basically every building.
Yeah, the digital twin vision. It's ambitious.
CoStar Group is definitely a company you need to keep an eye on if you're interested in real estate or tech. So, for you listening, what are the big takeaways? I think it's that consistency and growth even when the market's tricky. It's their innovative, maybe disruptive approach in residential, and it's this bold vision for digitizing the built world.
Those seem like the core threads, yeah. Resilience, disruption, and future tech bets.
So here's a final thought to leave you with. What is next? If CoStar's big bets pay off, if digital twins become standard, if their agent-focused marketplace really shifts the balance, how might that fundamentally change your experience?
Yeah, how might it change how you look for an apartment or buy a house or even how your office building is managed in the years ahead?
Something to think about. We encourage you to watch how these trends unfold, see how these technologies might start showing up in your own real estate dealings.
Definitely worth keeping an eye on.